Down for us now is Alpesh Van Der. He is the Chief Executive Officer for PKF. And Alpesh, good to see you this evening. I'd like to understand what's going on here like a 3-year-old. Simplify this for us, because from where I sit, you would expect that MPC will not be raising the lending or the base lending rate at this particular time when the cost of living is very high. And from where I sit again, this definitely increases the cost of credit. Yet for Kenyans to survive right now, a lot of us are opting for credit. From where you sit, what do you read?
Thank you for having me, Ken. I think I'm not surprised that the rates have actually increased. I think, as Mr. Thege said, I think the focus is now on the exchange rates. I think the exchange rate, Kenya's rate has depreciated more than expected. I think there was expectation that the rates in the US, UK, and Europe would actually be cut, but they have been stable over the last week. The expectations that the rates will go down in the third and fourth quarter. And I think it's a balancing game which the central bank is playing. You also need to understand and appreciate that the rate in December 2022 was 7%. It is now going to about 13%. So that's an increase of almost 95% on the interest rates. But what is also important to understand is that our currency has depreciated by more than 30%. And if you take another 10% interest, it's gone up by almost 40%. So I think we have to find the right balance. What is hitting Kenya more? Is it the increase in the cost of borrowing, or is it the depreciation of the currency? We also need to take into account the consideration that government debt, 50% of our debt is in local currency, 50% of our debt is in foreign currency. So I think we need to understand and appreciate and say what is going to be cheaper for the government to pay off this debt. So I think they have analyzed, they have looked at the root cause analysis and said that we can't allow the exchange rate to depreciate further because it will hit the economy in the long term. We may not get any foreign direct investment.
But from where you sit, will this achieve the control of the exchange rate plummeting? You know, right now, the cost is actually at about, the exchange rate is about 160 something. Will it achieve that aim? Because that's one of the things they're trying to do with this.
I think that the biggest challenge is, despite the depreciation of the Kenya shilling, our exports have not grown. Our biggest foreign exchange earner is the diaspora income. I think Kenya needs to be more productive. We need to support our export industry. We need to support our tourism industry. We need to be competitive. And in the long term, it doesn't look so great. At the end of the day, the exchange rate is determined by the demand and supply of foreign currency. So I think if we need to look at the foreign direct investment, if we look at the export, how we can support them, we need to look at competitive analysis. How can we be competitive? Just look at the cost of electricity. I think the production cost in Egypt and South Africa is very, very much cheaper than Kenya. And it's also a big surprise that despite the depreciation of the currency, we are not exporting more. And the government needs to look into that further and analyze.
How does this help the market define its own depreciation of the currencies, if it does at all?
It does. And at the end of the day, it's all about confidence. If people have confidence in the economy, the exchange rate will be in our favor. As you know, the increase in the interest rates in the developed world, I think on the Kenyan side, I think we were much slower. We just increased from 7 to 13, as I mentioned earlier, while in the developed nation, they moved from 0% to 5%. Okay. And if I'm an investor, I would rather invest in the US Treasury bonds than invest in Kenya. And if my currency is depreciating by 2% a month, that's a 24% to 30% increase in the valuation of the currency. Why would I keep my money in Kenyan shillings?
Okay.
So again, because also we have a lot of inequitable income in Kenya. People have a lot of surplus cash. We have a lot of speculators as well. From the records, the media which reports, we have over 1 trillion shillings in foreign deposits. So I think we need a little bit of confidence from government. Okay. I know we have a big Europe payment coming up in the month of June. Yeah. We were supposed to read part of it in December, which was postponed. I understand the president made an announcement that they're going back to the market. So I think we need some confidence in the markets and say, yes, we are going to be able to pay this bond off, and that will help to manage and stabilize the currency.
Okay. two quick final questions. Are we waking up, because this is the best lending rate, are we waking up tomorrow to facilities that have been reviewed in terms of repayments?
Yeah, I think it's a tough environment out there. I won't deny that. You're being hit by rising taxes. You're being hit by rising interest costs. You're getting hit by depreciation of the foreign currency. And Kenya is a net importing country. We import more. We love to import. So it's a very tough environment. I see a number of companies going to the banks to restructure their borrowings, because with the increased cost of credit, your installments are going to increase. So they need to manage their cash flows. They need to bring in efficiency. I don't think there'll be more hiring. I don't think there'll be more expansion plans coming in time to come.
Okay. And finally, how does this help the government, and how does this disadvantage the end consumer?
Well, the end consumer is always hit. At the end of the day, the people who have the surplus cash are going to benefit because I think the rates are going to go up. We have an infrastructure bond coming up the next couple of weeks. I expect the rates to hit between 19 to 20%. At the end of the day, it's the middle class, it's the lower class which will get hit with high rising inflation, and increased taxes and increased interest rates.
Thank you so much, Alpesh Vander, the Chief Executive Officer, PKF, for speaking to us tonight. Up in business news, back to the drawing board as Kenya